The question is to hike or not to hike, how to talk to the market. You know, Janet Yellen was speaking yesterday. She made some comments that the market got excited about again with this potential for a December rate hike on the table. I want to take a listen to exactly what she said.
What the committee has been expecting is that the economy will continue to grow at a pace that's sufficient to generate further improvements in the labor market and to return inflation to our 2% target over the medium term. And if the incoming information supports that expectation, then our statement indicates that December would be a live possibility, but importantly, that we've made no decision about it.
Okay, so Janet Yellen obviously saying a lot there. She chooses her words very carefully. She's saying the Fed is still data dependent. She's also saying December is a live possibility, but that no decision has been made at this point, but giving the market the indication that it could happen. Joining me now to talk a little bit more and to react to what Janet Yellen had to say, Peter Schiff from Euro Pacific Capital. Always great to have you on the program. Peter, the way I'm going to phrase this question to you is, I know that you think there's no potential or no real potential for them to actually implement a rate hike. But Janet Yellen is telling the market that there is a possibility of it. Why is she doing that?
Well, she's been saying that all along. And the possibility is no greater now than it was in January.
But this is my question, Peter. If she can't do it, then why say it?
Because you can't admit that you can't do it, because then you're admitting that the whole recovery is a sham, that the policy was a failure. The Fed has to talk about raising rates to pretend the recovery is real, but they can't actually raise them. And you just played her clip. What did Janet Yellen actually say? She said that the chances of a rate hike are very slim. She said we're probably not going to raise rates, but there's a probability that we could. I mean, anything is possible, but she didn't even say probable. She said possible, right? A long shot is possible. She said that we have to see further improvements in the labor market. Well, they're not going to get that. They've been looking for further improvements all year, and the labor market is softening. And so if they didn't have improvements in June, if they didn't have them in September, what's going to change? In fact, if the Fed does not know now if they're going to raise interest rates in 6 weeks, they're not going to do it, because the data is not going to be much different in the next 6 weeks as it's been all year. And it's still going to be slow growth. I don't think we're going to get strong jobs numbers. So,
Peter, the last couple of numbers haven't been that bad.
The last jobs numbers have been horrible. Did you see the jobs numbers for September and the downward revisions for August? And most of the economic news that we get has been bad. In fact, most of the news that we get is consistent with recession, not recovery. In fact, if the Fed were actually to surprise me and raise interest rates, it'd be the first time that they've raised interest rates into a slowing economy. I really doubt they want to do that. And in fact, we're still teetering on the edge, I think, of an official recession. Unofficially, I think we've been in one the entire time. But what really scares the Fed is to have to raise interest rates slightly and then have to bring them right back down to zero and launch QE4. So the safest thing for the Fed to do is not raise them at all. Then when they have to do QE4, they look less foolish.
By all accounts, I think the market participants agree that that would be a disaster, to do a rate hike and then reverse course from it. But let's take the timeline that you're setting out for us here and play it out a little bit more to help investors and viewers of the program. If we don't get a hike in December, many people tell me, well, she really can't do it in the first quarter because seasonally that's the time of year that we're weak. Then we're going into this time where we're approaching an election. They're probably not going to want to rock the boat then. Does that mean that we won't see a rate hike until late next year potentially?
Well, I don't think we're going to see one at all next year. Look, I don't think we're going to see a rate hike until there's a dollar crisis, until there's a sovereign debt crisis. Look, everybody makes the mistake of thinking that we have a real recovery. This is the biggest bubble the Fed has ever inflated. They do not want to prick it. But the problem is the air is already seeping out because 0% interest rates are not low enough to sustain this. We need negative rates. We need QE4. Now, we don't really need it. The Fed needs it to maintain the illusion of economic growth, to prop up the stock market, to prop up the housing market, to prop up the bond market. But the real economy is weakening as a result of what the Fed is doing. And we're never going to have a legitimate economic recovery until the Fed stops this.
We've talked about the dollar on this program before, and you've followed it historically. So at what level does the dollar index have to reach before you would consider it a dollar crisis? Right now, trading around 98.
Well, I mean, I think the dollar index, maybe it's going to break below 60. I mean, it has to. The dollar is going to be a lot lower before there's any concern. In fact, when the dollar starts to fall, a lot of people are going to think it's good news. Oh, it's going to be great for our exporters, right? People are going to think, oh, it's going to mean more inflation. People are going to think it's a good thing. It is not. It is a bad thing. The only thing keeping this economy afloat right now is the overvalued dollar and the fact that that's keeping the cost of living from rising much more rapidly. It's keeping interest rates artificially low. It's allowing the Fed to pretend that everything is great. But once the dollar really sinks, because people realize that the Fed is pretending, that this is all a game, that the Fed has been bluffing, that there never was an exit strategy, that there are no higher rates, the Fed can't shrink its balance sheet, that it's about to blow the balance sheet through the roof with more quantitative easing, the bottom is going to drop out of the dollar, and then everybody's going to have to stop pretending, and we're going to have to deal with the reality. And the reality is we are staring at a financial crisis much worse than 2008 because nothing the Federal Reserve has done since 2008 has improved the economy. They have made everything worse with this monetary policy, and that is why they're scared to raise rates, because they'll prove it.
I want to switch gears for a moment here and talk about gold. If you get this dollar crisis that you're talking about, a weaker dollar would be beneficial to gold. It would support your thesis. But why isn't gold really at this point moving higher with the threat of that, if the threat of that is a real possibility?
Because people don't perceive that threat. Everybody is still fooled by the Fed. They still believe that the Fed is serious about raising interest rates as if they can actually do it. Even if the Fed wanted to, they can't, not unless they're willing to put the economy through a protracted recession and a worse financial crisis than 2008, which is exactly what they should do. They should have done it in 2008, but they didn't, so they're not going to do it now.
So why isn't gold moving? I know you're saying it's sort of people aren't really realizing the dynamics within the marketplace, but certainly there are some investors out there that are very wise, very smart, that have been following this commodity. It just can't really get going.
Yeah, well, you know what? There's not that many of us. There's some, but you know they're not the ones that are controlling the market. But eventually, the people who are fooled by the Fed, who actually believe in this mirage of recovery, they will wake up. Just like the people who were buying the dot-com stocks in the 90s woke up, just like people who were buying subprime mortgages woke up, eventually the people who are buying the dollar and selling gold are going to come out of this fantasy world and join me in reality. And when that happens, they're going to be scrambling to buy gold. And you know what? The prices are going to be much higher when everybody is trying to buy what they're currently trying to sell.
Okay, last question before I let you go, just really quickly. I know you don't like to do this, but our traders, our futures now traders, they're sort of living in the moment here. For the next 2 months, by the end of the year, where do you think gold prices are going to be, or do you think we're just going to tread water?
Well, actually, I do think gold can have a nice rally by the end of the year because I don't expect the Fed to raise rates in December. Now, of course, by the time the December meeting comes around, most people won't expect a rate hike either. I mean, by then, you know, we're going to get a jobs number tomorrow. If that number is as weak as the last 2 months, I think gold's going to rally on that. And, you know, we could have a very weak number in December. Meanwhile, I do expect layoffs to start picking up by the end of the year. I do think this is going to be a horrible Christmas, and I think you're going to see a lot of layoffs in retail in the early part of the year. And in fact, I think a lot of retailers have been basically ready for a recovery. I think there's a lot of inventory that retailers can't sell. I think they've overestimated the ability of their customers to buy their products. Americans are broke. They're loaded up with debt.
Well,
they have lousy, low-paying jobs if they even have jobs.
If the windows in New York City, Peter, are any indication, we had before Halloween Christmas windows going up in my neighborhood. So they really are trying to pump it up this year. You know, whether it pans out or not, of course, is a question.
Yeah, well,
but great to have you on the program, and we will have you on again soon. Thanks, Peter Schiff.